If I started investing my first $1,000 this year, here's exactly what I do. I take that $1,000 and split it up into two buckets, $800 in one and $200 in the other. And in this video today, I'm going to tell you exactly what investment products I would invest in if I were a beginner and how and where to actually buy them. Quick disclaimer, guys, that I am only sharing how I would personally invest my first $1,000. What's suitable for me may not be suitable for everyone, and this is not financial advice, so make sure to always do your own research before investing your money. Investing grows your money, no doubt, but it can also go wrong very fast. So stick with me to the end and I'll tell you what common beginner mistakes to avoid. So let me set this straight. Investing money always has a risk, and it's up to you how much risk you want to take. Usually when people are closer to retirement, they want less risk as they need to access the money. But if I started investing as a 20 or 30-year-old, I would want to invest in things that grow strong over the long term, even if they were riskier. Of course, I could take close to zero risk and put all of my money in a GIC or even worse, a savings account at 3 or 4%. But if we factored in inflation, my money would not only not grow, but even lose value. So this is what I do instead. If I had $1,000, I would take $800 of it and invest it into the S&P 500 via the FVF index fund in my TFSA. And I'll tell you why. And you might ask, what is the S&P 500? What is it anyway? And why not invest in individual stocks instead? Here's the thing. When you invest in a single stock, you are betting your money on one company. Professional investors like Warren Buffett have large teams to pick winning stocks, but the average Joe or Jill usually lacks the resources, the time, and the knowledge to pick the right stock. And if your chosen stock tanks, then there goes your money. But if you invest into the S&P 500 instead, you are taking out the guesswork. By investing into the S&P 500, you are automatically investing into the 500 largest companies in the US all at once, and that gives you instant diversification. You indirectly own a tiny slice of 500 companies, so if one tanks, it won't drag down your entire portfolio. The S&P 500 has shown consistent long-term growth. That's what we want, delivering an average annual return of 7 to 10% after inflation, making it a reliable wealth builder over time. Now, say you're convinced. How do you actually buy into the S&P 500? The S&P 500 itself is not a product. To invest into it, you will need to buy what's called an ETF, or an exchange-traded fund that tracks the S&P 500. Nowadays, in the Western world, you don't just buy eggs by the piece, but usually you buy eggs packaged into a product by a company. At least that's what I do. In Canada, you have ETFs like the VFV or the VOO that you can buy. They both track the S&P 500, but while the VFV is traded in Canadian dollars, the VOO is traded in US dollars. Now, which of these two should you choose? Personally, I like both of them. Choosing between the VFV and the VOO is what I'd call an optimization decision. You could profit slightly more by choosing one over the other, but in the larger scheme, it is insignificant. Rather than obsessing over which one to invest in and delaying investing, it's more important to be invested, because else you won't profit from the growth at all. By the way, guys, I noticed that less of 20% of you are subscribed to my channel. If you like my videos and want to get notified each time I upload a new one, make sure that you hit that subscribe button and turn notifications on. Thank you. Now, where and how to buy these ETFs? Nowadays, it's easier than ever to invest completely on your own. If I'd started investing this year, I would definitely go for an online investment platform instead of one of the traditional large banks. And there are a lot of investment platforms in Canada that you can choose from. As a beginner, I'd make sure that I choose an investment app that's super easy to use, uncomplicated to sign up for, and most importantly, charges no fees for trading stocks and ETFs. And that's why I signed up with Wealthsimple, a Canadian investment platform I've been investing with for the last 5 years. Full disclosure, I also have other investment accounts, but Wealthsimple was the one I used when I first started investing. I used the self-directed investment option because it allows you to buy and sell stocks and ETFs without a fee. If you use the managed investment option instead, the financial institution would manage your investments, but you will be charged a fee, usually a few percentages of your total invested assets. Personally, I prefer to choose my own investments and not pay a fee. For simplicity, I would invest my money in a TFSA first. So when you open an account with any financial institution, you usually have the choice between non-registered accounts or registered accounts. Here on the right, you can see on the Wealthsimple platform, it shows non-registered. Then above, you have your registered accounts, TFSA, RSP, and so on. And depending on your financial goals, one or the other could be better for you. But most people will do well with the TFSA. Both the TFSA and the RSP shelter the growth of your investments. The income that you earn from your investments in those accounts are not taxed. The main difference though is that when you withdraw money from your RSP, there are tax consequences. So you have to think it through before you deposit or withdraw. Whereas with the TFSA, you can more easily withdraw your money when you need it. There is much more to it, so if you want to know the details, you can watch this video up here. For now, I'd say that I would invest my first dollars into a TFSA first while figuring out whether the TFSA or RSP is better for me in the long term. I currently have both, as you can see on my Wealthsimple app, and if you later on want to decide to invest all your money into an RSP, you can just easily withdraw money from your TFSA and move it to your RSP. It's much more complicated the other way. In any case, don't let this decision paralyze you and keep you from investing. Next, I'd use my $800 in my TFSA to buy the VFV. On Wealthsimple, I'd simply click on the buy button and enter the ticker VFV. Now, you might be wondering why VFV instead of VOO, since they both track the S&P 500. Here's the main difference. VOO is in US dollars and traded on a US exchange, which makes it better suited for an RSP. That is because US dividends inside an RSP aren't hit withholding taxes. So if you decided to invest in an RSP first, then go with the VOO instead. But if you decide to invest in a TFSA first, then go with VFV. You won't need to worry about the currency exchange. Note though that the withholding tax will apply on VFV's dividend in your TFSA, but I think it's negligible as the dividend yield is only around 1% anyway. Again, not financial advice, this is just how I would start. Many people would overthink it in the beginning and end up not investing at all, and I think that is the worst mistake that you could do. In any case, if you decide to give Wealthsimple a try, you can get a $25 bonus straight into your account just by using my referral code in the descriptions below and funding your account with a minimum of $1. I will also receive a small commission, and with that you'll be supporting my channel as well. So thank you. Now that was bucket 1, and now on to bucket number 2. Of that $1,000, I would invest the remaining $200 into Bitcoin. And before you click off, yes, I know Bitcoin sounds like a hype trend, and it's right for you to be skeptical and extremely cautious. I was in the beginning myself, but I've been investing in Bitcoin since 2022, and it has outperformed all my other investments, growing over 85% in the last 3 years. Is it a good investment for beginners? In certain small amounts, I believe it is. Even established asset managers like BlackRock, like them or not, now recommend holding at least 2% of Bitcoin as part of your portfolio. And some go as far as to say that by not investing in Bitcoin, you are practically betting against it. Bitcoin is not a fad, as many people believe. It has been around since 2008 after all. In 2011, Bitcoin's price was only $1, and even in 2020, it was only $5,000. At that time, people thought it was a fad and overpriced. Now, 5 years later in 2025, Bitcoin has surpassed 100,000 US dollars. And yes, it is super volatile, as you can see from this chart here, and that's why you should only invest the portion of your money that you can afford to invest long term, over 5 to 10 years even. But as you see, over the long term, Bitcoin's price has only gone up. By the way, guys, let me know in the comments below, what do you think about Bitcoin? Have your friends or family members invested in Bitcoin already? And are you interested in more videos about Bitcoin? Bitcoin has even gone up compared to gold, so no wonder people refer to it as digital gold, although that is not the actual reason. Had I known about Bitcoin when I just started investing, I would definitely invest a bit of money into it. Yes, you can earn a healthy return by investing into the S&P 500 or other indices, but it's very difficult to compete with Bitcoin's performance. The reason the Bitcoin's price is going up and up over the long term is because it has actual value. While investments priced in dollars, euros, yen are priced in fiat currency, which is government money that continues to expand and cause monetary inflation, Bitcoin's value actually continues to go up because there is limited supply of it. 21 million is all there will ever be. That is why Bitcoin is often used as a hedge against inflation. While everything else continues to lose value, Bitcoin is gaining value. And of course, we don't know for sure what Bitcoin's price will be in the future, but no matter whose prediction you look at, the numbers are all significant. Only you can decide if you're ready to invest in Bitcoin, but in any case, I would say start with small amounts first and gradually increase your investments into Bitcoin as you learn more about it. And this is not just lip service. Right now, I'm actually heavily invested into Bitcoin and will continue doing so. Now, in case you're wondering how to invest in Bitcoin, I'd say there are 2 ways. One, the safest way is to buy Bitcoin and put it in cold storage or in a cold wallet. Problem is that this is oftentimes too complicated for beginners, and if done incorrectly, it could backfire and you could lose your Bitcoin instead. So as a beginner and for small amounts, I would buy Bitcoin on a crypto exchange. For example, on NDAX, a Canadian crypto exchange with one of the lowest fees in the market. I also have an account with them, so if you use my link in the descriptions below, you can get a $10 bonus to get started. Alternatively, to make things easier, you can also buy Bitcoin on Wealthsimple. It is more expensive, I must say, with a trading fee of 2%, but the advantage for beginners is that you have all your investments on one platform. And if you need more guidance on how to buy Bitcoin on Wealthsimple, you can click on this video here later. Now guys, before you start investing, make sure you avoid the following 3 common mistakes that beginners often make. Mistake number 1 is not having an emergency fund. Make sure you stash away enough money to cover a few months of living expenses, so in case you need cash, you won't be forced to sell your investments. And if you need a place to park your $5,000 to $10,000 emergency fund, I put a link to my favorite high interest savings account from EQ Bank that pays 4% interest down below. Mistake number 2 is having high interest debt. These are mostly consumer loans and credit card debt on which you pay 10, 20% or more in interest. And by not paying off these debts first, you're practically canceling out any other investment gains that you're going to make. So make sure that you pay these off first before you start investing. Mistake number 3 is blindly following other people. Don't just follow what other people say, including me. I'm just a YouTuber talking about my experience. In the end, you gotta invest based on your investment goals, your risk tolerance, income, and life situation. And these are all different for each person, so it's very risky to just copy someone else's investments. This is just the beginning of your investment journey. So let me know if this video has encouraged you to start or continue investing. And don't forget, in case you want to get started with Wealthsimple, make sure that you get that $25 bonus by using my referral code down below. Thanks for watching and see you in the next one.